So, factors have been around for a few decades. In fact, Nobel Prize was won by Eugene Fama and French. It's called the Fama French paper. They started Dimensional Fund Advisors, which is out there today, and they do a lot of factor investing. They're firms like AQR, billions of dollars in AUM. They do factor investing. So, what a factor is this? A factor is defined as a market neutral portfolio, meaning think of it as like a dollar neutral portfolio. There's exact same dollar amount that's long as there is dollar amount that is short. So if you sum up the weights in that portfolio, and normally if you're 100% long only, the sum of your weights are 100%. In a factor basket, or what's called a factor mimicking portfolio, the sum of the weights is 0% because all your longs have offsetting shorts. These are market neutral baskets. And what you can do is you can take, say, the largest market cap securities of the world, go long the top 10% of them, and then go short the bottom 10% of the smallest market cap securities in the world. That's called the size factor. It's one of the factors used in the Fama French paper. And you're market neutral, and you can see what's the performance of that portfolio. It's an investable portfolio. It happens to be a market neutral portfolio. What they found in that paper is that smaller companies beat larger companies. That's no longer true, by the way, for all the foregoing discussion. But that basket had a positive coefficient, meaning the beta on that basket was positive. So if you had more exposure to that, then you were doing well. So the other factors, there are a lot of factors out there now, by the way. That was one. Another factor is called value. So they found that stocks with lower valuations beat stocks with higher valuations. They go long the top 10% most expensive, the top decile is a term they use, and then short the bottom decile. So again, you're dollar neutral and value beat growth. Okay, we'll come back to that topic in a bit later today. I want to show you some data around that because a lot of misconception in value versus growth. Momentum factor is another one. It's been around for decades too. In fact, Renaissance Technologies created their first success around the momentum factor. Momentum factor is pretty simple. Again, you go long the top 10 stocks that have the most momentum and short the bottom 10%. Now, what does that mean, most momentum? So momentum factor is defined as stocks that have the highest trailing 1 year return, ignoring the most recent month. Forget about why that's the case. I want to get into the history of that. But what stocks went up the most in the last 12 months? It's a simple way to think about it. Just ignore the most recent 1 month. The most recent 1 month return is another factor. It's called the reversal factor. Okay. So an interesting idea, by the way, is to own stocks that have momentum and recently had a reversal. Right now, most people know that it's called buy the dip in a trend that's going up. So quants have systematized all this stuff into factors. All right. There are other factors too. There's a volatility factor. There's a short interest factor, and you can go on and on. So